Hello, my friends. Thank you for taking time to be with me today. I'm so glad you could be here. Today, I'd like to talk to you about the trades that I took Friday, May 14th. Before you have the USD JPY 15 minute, the Euro USD 15 minute, the Aussie JPY 15 minute, and the Euro JPY on a 15-minute time frame. Let's take a look at this USD JPY first. Now you can see where I got up and drew this kind of bullish trend line. It's an intermediate trend line off of these two candles. This is my 7 o'clock central candle. It is going counter to that little intermediate trend, but, and let me show you, it is in 100% harmony with the overall bearish trend. Now, I don't take this trade. Why? I don't take this trade because we are so close to that intermediate trend line, and you can see what happened. Guys, when I take a trade, I'm looking to take a trade that's going to give me the most advantage, the trade that's going to put the most profit in my pocket. And you can see that just was not a trade that was worth taking. You see, the very next candle, the bulls come in, take over, they rally with price. So that would not have been a good trade to take. Now, the best opportunity for me came here at 8:30. Why? Because you have this kind of sort of pattern, even though it's in sideways price action, you have a run up in price. However, this run up in price is not supported. It is rejected, and it is in harmony with the overall trend. So that was my opportunity. I shorted on the bounce of this next candle for a beautiful bleed to the short side. Now this is the Euro USD. You can see again there's that trend line. Lots of choppy price action. Not much of an opportunity there for me. I know, like I said, traders made some money going long on these pairs. However, for me, it just was not the best opportunity. Remember, I'm in this to put the most profit in my pocket, where the charts are showing me the biggest advantage. Again, here is my 7 o'clock candle is going in harmony with the intermediate trend. However, you can see here, we're not getting support. Kind of choppy price action. My best opportunity again came with that 8:30 candle. You got the bounce here off of that intermediate trend line. Rejection. Look at that. That's over half of that candlestick's real body. And at 8:30, the bears just come in and clobber everything. Look at that close down there. So I shorted off of the little bounce of this next candle. Price bled down beautifully. Aussie JPY, you can see where I drew my trend line, the intermediate trend line. This price action was kind of choppy and hard to read. This is my 7 o'clock candle right there at the trend, closes below the trend. But it was kind of early to take this. Plus the fact I was watching all four pair at the same time. Look at how the bulls came and stole price action. But this was a wonderful signal for me. Now this is actually at 7:45. This is my 8 o'clock candle. You can see again price tries to run up. Now notice what's going on in this whole situation. You have your previous support again becoming resistance. When price ran back up here at 8:30 and was rejected, oh, it made for an incredible bleed to the short side. The reason you would not take this candle long is because it is right after you get the break of that trend line, and now this trend line is acting as support. You get a strong break that's in harmony with your overall trend, so you certainly would not have wanted to take that to the long side. Now this is a Euro JPY. You see my trend line. This is my 7 o'clock candle. Nothing significant here. Lots of choppy price action. And keep in mind, I'm in this real time, so there's nothing that's screaming to take this trade until this 8:30 candle. Look at that signal. They're beautiful. The bulls come back, try to steal the ball. However, it's intercepted at 8:30 to close below this intermediate trend line and in harmony with the overall trend. I was so tempted to take these trades at 8:30 because I felt like they were going to work out. However, I made myself wait for the close of the candle. Waited for the bounce of that 8:45 candle and just wrote that price down. Now let me show you all of this on the hourly chart too. The hourly chart is a wonderful confirmation when you want to confirm your price action on a shorter time frame. Now this is that same price action on the hourly time frame. So the hourly time frame is telling you everything you need to know. You get in on that 9 o'clock candle, beautiful shorting opportunity. This is the Euro USD. There is that price action. This is that Aussie JPY hourly time frame. Lastly, it is our Euro JPY. Now guys, I actually ended up making a mistake on all four of these pairs. Let me use this Euro JPY and show you. Now, generally you don't have this much price action on Friday, and I certainly did not get to take advantage of all of it, but it made for a wonderful short. It was a cash cow Friday. So what I decided to do, I decided to wait price action out. Decided to wait for a bounce and shorted the bounce. Now it worked out on all four pairs. I closed everything in profit. However, it was a dumb trade. I took this trade back to the short side for about 15 pips. 15 to 17 pips each pair. It's somewhere in there. And it closed out in profit. But the reason it closed out in profit was because I had such a short amount of pips. Look at what happened after the close of this candle. We got into this sideways price action. It was too late in the day to take that trade. The trade was too risky. Even though it worked out, it was a very high risk, dumb trade. There's one last thing I'd like to recapitulate. Something that I mentioned earlier in the Aussie JPY. This is the Euro USD, and I want to show you here and here. Here you have what looks to be a bullish reversal hammer. However, you do not want to take this trade to the long side because you just broke the trend line and the overall trend is bearish. You can see it again here in this choppy price action. You were just beginning that trend when you got this bearish signal. Where are you going to go? That is not going to make for a good shorting opportunity. So guys, when you're looking at these signals, look at where they are occurring in the trend. A lot of times, if they are occurring, if the reversal is occurring soon after the trend, most of the time it is not a valid reversal. Not to say all the time, because there are no 100% in the market. Guys, you can absolutely do this. This is not rocket science. You can be successful here. Be sure to practice, drill, and rehearse on your demo account. Remember, you are competing against people who live, sleep, and eat this stuff. Those are your competitors, as well as the ghosts that are in your head. Guys, you can absolutely do this. Just keep in mind that your charts will tell you more truth than anything out there. Have a terrific trading week.